It's Friday, November 4th, 2022. Markets just closed a little while ago. This is the land of confusion. We saw just huge volatility today. Let's talk about it here and kind of recap what transpired today, what's happening in the economy. But again, it is so confusing. We are in the land of confusion. Dow Jones just closed up 402 points. It was up 610 points earlier before it went negative. This thing was going positive, negative throughout the day, but going from 610 points, then going negative, and then closing up 402 points. Incredible. NASDAQ up 132 points. Oil up $4.43. As I make this video, gold is up $53. Silver is up $1.52. The dollar down 1.86% today. 10-year bond yield sitting at 4.17%. So this thing is all over the place. Yesterday, I said, how in the world could the markets be up today unless there's some type of manipulation? So somebody please comment down below. Why were the markets up today? Was it the job numbers? What was the news that was positive for these markets other than the job numbers that we got today? I don't really know, but how could we be up 610 points earlier and then go negative? And then what turned it around to go positive? Again, the land of confusion. So we added 261,000 jobs. That's the lowest number since December of 2020. Unemployment moved up a little bit today to 3.7% from 3.5%. So a little bump in unemployment. Labor participation rate sitting at 62.2%. As I'm watching some of these financial shows today, everybody hoping that the Fed is going to slow down and go to 25 or 50 basis point rate hikes. Good luck with that, because when you added another 261,000 jobs, I believe they were expecting 200, and we got 261,000. That is just more juice for the Fed to continue raising rates aggressively. I want to talk about this article. We touched on this, I believe, yesterday. Wells Fargo braces for more layoffs as loan volumes collapse 90% year over year. Nobody today talking about what's happening in the housing market. Big trouble. We are beginning to see major cracks in the housing market. Nobody's talking about it on these financial channels. I see a lot of people talking about it on YouTube. I see a lot of people in the comments talking about it. And this is going to bring the whole house of cards down. But it's amazing that the market could be up 610 points at one point today, knowing what is happening in the housing market. Again, land of confusion. Yahoo Business, housing market activity is crashing and it threatens to push the U.S. into recession just like it did back in 1981 and 2008. This article on Yahoo is about a week old, and I just want to recap on some of the points it made here and why Dave Ramsey is wrong when he came out a couple months ago saying not to worry, there's going to be no housing crash. This is just doom and gloom. Don't listen. Dave Ramsey is completely wrong. Remember, when he said this on his radio show, the 30-year fixed rate was around 5%. Now it's 7.3%. And we are beginning to see a housing collapse form. In this article, it mentions Las Vegas real estate. And Las Vegas real estate is a leading indicator of what is going to come to the rest of the United States of America. I do believe that we are going to see the 30-year fixed mortgage rate at 8% plus by the end of this year. I believe next year we're going to see it in double digits, minimal 10%. But in this article, it goes on to say the Greater Las Vegas Association of Realtors said they were averaging 300 new members every month. In October, that number fell to 120. However, they are processing 30 realtor withdrawals a day. So every day, 30 real estate agents in the Las Vegas area are calling it quits. That's around 900 agents a month. United States refis down 90%. Home sales down 38%. And you see here in Vegas, 30 agents a day are quitting. That's roughly 900 a month. This is a leading indicator of what is about to happen to the rest of the United States of America, and parts of America are already beginning to see this, just like Las Vegas. And this is a warning sign to everybody. If you're thinking about selling your house, if you have to sell your house, you better do it immediately, because this market is beginning to decelerate at an alarming rate. So get ready, because we are going to see big things happening in housing, which are going to affect the stock market, going to affect the economy, going to have a major negative impact. Bank of America says rush to cash is now the fastest since the health crisis. Bank of America does not expect the Fed to pivot anytime soon. Neither do I. Many of you believe the Fed is not going to pivot anytime soon either. Some of you do. We will find out. People still believe cash is king. I believe gold is king. The asset class of cash had inflows of $62.1 billion in the week through November 2nd, $194 billion of inflows in cash for the start of October. And this, according to the strategists at Bank of America. Now, eventually, people sitting on a lot of cash, holding a bunch of cash, are going to realize that they're losing about 20% a year in just holding cash. Now, I do believe you got to hold some cash, but not 100%. You can't be sitting 100% on cash. And eventually, people, investors, institutions are going to realize that inflation isn't really 8.2%. It's around 20%, and that cash is being eaten alive. And they're going to realize that gold is going to be a much safer haven to be sitting in, a much better asset, a real asset to be sitting in to fight and to protect yourself against inflation. And I ordered more gold yesterday. I don't think there's any other place to go right now. If you're sitting on cash and you need to diversify, where do you go other than cash, other than gold, other than silver? Again, look at what happened to gold today, silver today. Incredible, but these markets are going to wake up and realize that cash is not king, that you better be holding some gold, some silver. I think people are beginning to realize that you're not going to measure wealth in dollars. You're going to begin to measure it in ounces. U.S. payroll surged by 261,000 in October, better than expected as hiring remains strong. Again, this is more fuel for the Fed to keep raising rates. They are not getting the effect that they want. They want to see payrolls slow down. They want to see unemployment rise. We went from 3.5% to 3.7% unemployment. That's not a huge rise. They're going to have to get more aggressive. And remember, when we talk about these 261,000 jobs, this surge, it's literally having the opposite effect of what the Fed wants. But many of these jobs, we have to remember, are low wage and part-time jobs. They don't offer benefits. They don't offer opportunity to advance. They're 18, 20, 25 hours a week, minimum wage, low wage jobs. And there's no way that these type of jobs are going to sustain the average person in this economy. They're going to sustain the average person to be able to pay their bills. People are working 2 jobs, 3 jobs, even 4 jobs in order just to keep their heads above water now. So it sounds like great news that we had a payroll surge, but it's not the effect that the Fed wants. And you have to look at these jobs much closer to where the jobs were. Service sector, healthcare, not the highest paying jobs in the world. Here's another one. Retailers having new holiday headache. People are spending their money on travel. This on CNBC. If you want to see your family members this year and you have to get on a plane or in a car to do it, the price of fuel continues to skyrocket. We see oil prices up over $4 today. people are going to have to decide, do they want to buy Christmas presents or do they want to go see their relatives and friends? And they're going to have to make a decision here. And it's saying right here, people would rather travel. They're going to go see family members, relatives, friends, and they're going to have to cut out the gifts. And this is going to hit retailers hard this year. Remember, people did their shopping over the health crisis when they were getting all the free money. So that's over. Harvard economist Professor Kenneth Rogoff warns U.S. headed for significant recession. Professor, we are already there. This on Fox Business today. We are already there. In the article, the professor says, the world is in bad shape. I worry that not only we're going to get a mild recession, I think the chances that we have got a significant recession are really high. Where have you been, Professor? This always shocks me that the professors, the analysts, the economists, the bankers, the strategists, all these professionals still don't realize that we're in a recession right now. I don't understand anybody that cannot see that we're in a recession at this point. And yet so many people make life-altering decisions, financial decisions based on what people like this say, people on the television. And they're telling people that we're not in a recession yet, that next year we'll be in one. By that time, we'll be in a significant depression. So you need to use caution right now and be very, very alert to what is taking place right now. This is the time, ladies and gentlemen, to be a little bit paranoid, to be a little bit fearful, worried. That's what's going to keep you alive financially in this economy. People who look the other way, people who are naive, people who are using hope as a strategy, they're going to lose. This is the time you better get paranoid. You better get worried. You better get scared. Because if you don't, you're going to get wiped out. Starbucks, U.S. sales climb as customers spend more on pricey drinks. Today, Starbucks up 8%. They're down about 22% year to date. People are coming back and they're spending more money at Starbucks and they're getting their pumpkin lattes, probably $8, $9, $10, whatever. I haven't been to a Starbucks in many, many years. I refuse to give an organization or a company my money like that like Starbucks. Just cannot promote or support a company like Starbucks. But that's up to you. But I think the dumb money is buying pumpkin lattes. I think the smart money today is buying silver, gold. And so many people continue to say they don't have any money to buy silver or gold. They don't have any money to put away and have a cash reserve. But they always seem to have enough money to go buy a pumpkin latte or a high dollar coffee at Starbucks. They're always on social media. They're always holding a Starbucks. So they've got their $7, $8, $9 coffee. And it's just so trendy. It's almost literally like a cult at this point. It's shocking. But it's the same people who have absolutely no money, have no silver, no gold, and no plan. And so again, the dumb money is going to continue to buy stuff like this. The smart money is going to continue to buy gold, continue to buy silver. And you're going to be happy that you did, because when things really, really get bad, you're going to need gold. You're going to need silver, you're going to need some cash, and you're going to need the mental mindset. So take this weekend as we head in to get all your preparations in order, get them sorted, continue to walk close to God, and just strengthen yourself mentally, physically, spiritually, and financially. It's a beautiful day today. I feel blessed that I'm walking the earth today. I feel very, very blessed, and all of you should too. If you have a roof over your head, you're alive, you got 2 arms, 2 legs, maybe you have 1 arm, 1 leg, you're alive, you're functioning, you're breathing. Thank God for what you have, because you're better off than somebody else. So I'm going to leave it there today, but again, land of confusion today. Market up on top of everything that is happening. Expect more rate hikes, more aggressive rate hikes. Expect tougher times, ladies and gentlemen, and they are not going to beat inflation by raising rates at 25, 50, or 75 basis points. So prepare. You better own assets, get the debts paid off, get your house in order ASAP, because we are heading down a very deep and dark road. God bless. Have a great weekend. Look forward to speaking with all of you very, very soon.